Good afternoon. It's Jeffrey Christian of CPM Group. It's 12:30 in the afternoon on Friday, the 24th of February here in New York. I wanted to talk about what central bank digital currencies might do to gold and silver. It's a question that has been asked of us several times in the comments to past videos that CPM Group has posted. I'll also update on the gold and silver markets, what's happened this week, and what we make of this week's price activity with regard to where we think the prices are going over the next several weeks and several months. The issue of central bank digital currencies is one that's grossly misunderstood and misrepresented by gold promoters, and has generated a lot of concerns that are probably ill-placed. The likelihood is that in the future, and it may be 5 years from now, or 10 years from now, or 20 years from now, it probably will not be as fast as some people expect, because as the Bank of Canada said in a report last week, there are a lot of technical issues that need to be addressed before you make that transition. If you think about it, when various countries in Europe decided to get rid of their own national currencies and go with the euro as a unified currency within that market, they talked about it from the 1960s into the 1980s. They reached the Maastricht Accord in 1988, which said that by January 1st, 1999, they would dissolve their own national currencies and start using the euro and have a European central bank that they would be parties to and have a unified monetary policy. It took decades. The move toward digital currency won't take that long. It's underway. There's a lot of studying being done. And its effect on gold and silver prices are pretty much likely to be negligible. I say that because the concept of a digital currency and national digital currencies is these digital currencies issued by central banks. It's a change in the medium of exchange, and it's not a change in the substance of the money. It's not actually like European central banks saying, let's get rid of our own currencies and have the euro. It's more like what happened over the last 150 years. Let's go away from using silver and gold coins as well as private banknotes that may or may not be backed by reserves because there's no central bank overseeing and examining and auditing those banks. Let's move from that to a nationally issued currency. And then let's move from that to checkbooks. And then let's move from that to credit cards. And then debit cards and electronic fund transfers. There has been a progression of the changes of the mediums of exchange of money. Not necessarily the substance of what that money is. And central bank digital currencies are a change in the medium of exchange of money. I know there are any number of spooky guys on the internet saying, no, this is the beginning of Big Brother, and this will allow them to take away your currencies, etc., etc., etc. None of which actually is relevant to the story. Central bank digital currencies will be a change in the way money changes hands. And its effect on gold and silver markets and prices should be almost unnoticeable. People will continue to want to hold some of their assets in gold and silver, and no central bank in the world has talked about taking away the gold and silver that its citizens have. And no central bank in the world has said, well, if we have digital currencies, we can confiscate or call in all of the gold and silver that the investors have. Central banks see gold and silver as investments and financial assets, much more than they see gold as a monetary asset and silver as a former monetary asset that no longer has a function in monetary systems, only in financial systems. So gold and silver will continue to trade and continue to be bought and sold by investors and others, even when the technology of money has changed from the current credit cards, debit cards, exchange, electronic fund transfers to the next generation of currencies. It's really not a big issue, and that's why we haven't talked about it. It's a non-issue in the real world. It's only an issue if you are seeking reasons to be worried about Big Brother. You should be worried about Big Brother, but not with the digital currencies. Now, what happened with gold and silver? These charts are through Wednesday morning. Gold and silver prices had risen from early November into January. They have been coming down for a couple weeks. And since Wednesday, the last time we did a video, they've come down further. Gold, I think, was down to about $18.10 this morning at one point. Silver is testing, I think, $21, if I recall correctly. This reflects investors moving away from being so concerned about economic and financial market conditions. Less concern about a recession, less concern that the next 25 or 50 basis point increases in U.S. interest rates will throw us into a recession, less concerned about the stock market collapsing 40 or 50 or 80%, less concerned about inflation. There's still a lot of concerns about the financial industry stability. You've seen a shift in investor holdings of gold away from smaller, less liquid ETFs to larger, more liquid ETFs run by systemically important banks that garner more attention from banking regulators. So there's a flight to security within the financial industry and financial markets across financial assets. And it's being reflected to some extent in gold and silver. But there's also a view that prices may top out and that they may move sideways to lower for the next 7 months or longer. That's CPM Group's view. Our expectation is that the prices will be peaking in the first quarter. The first quarter is almost 2/3 over right now. We may have seen the highs for a while already in gold and silver. Obviously, some political development or economic development could upset that, but we may be seeing the highs and we may see prices fall. Last year, the range of gold prices was $1,624 to $2,060. And the price on an annual average basis was $1,804, which was a record high gold price. Obviously, if you think in terms of annual averages, you saw the gold price at a record high. If you thought of it on an intraday move, you saw a 25% decline in gold prices over the course of the year, from that intraday high in early March after Russia had invaded Ukraine to that low in early November of 1624. Our expectation is that the range of gold prices will be much smaller this year. We're looking at maybe 1740, 1750 as a low, and maybe 1950 as a high for most of this year. The fourth quarter may see prices start moving out of that range. But we do see the gold price spending most of the time in the upper half of that range, so that at the end of the year, we expect to see another record annual average gold price that might be 5 or 6 or 7% higher than 2022's record gold price. And as I said, we think that the price may be moving higher by the fourth quarter, and we expect gold prices to be significantly higher in 2024 for a variety of economic and political and financial reasons. With silver, we're looking at a similar thing. We saw silver prices come down very hard last year, further than we thought they would. If we thought they might go down to 18, I think they went down to 16 something. We're looking at the price came back up. It didn't get back up to the highs that we saw in the first quarter of 2022, and it seems to have topped out. Most of the increase in silver was in November and December, while a big part of the increase in gold was actually in January. Silver was kind of already topping out in early January, and it's been coming down. There is more investor concern about silver prices and how high they might go and how low they may go. People who last year were telling you that silver could hit $750 in 2022 are now saying silver could hit $30 in 2023. So some of that exuberance, excessive exuberance, has burned off of the market. And the investors who are there are taking a much more rational and supportable view. We do think that the price probably will outperform last year, but it's all going to depend on what investors think about the economy and politics. That's really all I have for this video. We will not do a video next Tuesday. I think I mentioned that this past Wednesday in the video. And we're doing that because on Wednesday we have the Silver Facts and Fantasies 2023 webinar. It's a place where you can challenge your assumptions about the world and about silver. You can ask us questions. We've already got several hundred people who have registered to plug into it. It's free. And we've gotten numerous questions and issues that people want us to address. We had said that we'd talk about, what's going on in the real silver market, real supply and demand. What are our projections for supply, demand, and price in 2023 and beyond? What are the factors that determine silver prices? What are the factors that don't matter? Central bank digital currency. Silver myths, why they exist, and who profits from them. Available silver inventories. We'll talk about silver mine reserves. Since we talked about that a few weeks ago, and one of the comments said, didn't quite understand the relationship between silver reserves, silver resources, silver prices, and the mining industry in general. And we'll probably wind up talking about the relationship between COMEX inventories and silver prices and other subjects that come up. So you can go to cpmgroup.com. You can register for this free webinar. It's at 10 o'clock next Wednesday, March 1st. And you can send us questions or topics that you would like for us to cover. And we'll address the ones that are most relevant to the real world. And maybe some that aren't so relevant. Meanwhile, you can go to our website. You can pre-order our gold yearbook, silver yearbook, platinum yearbook. You can order other research and consulting services that we have. Thank you. Have a good weekend. Take care of yourself and those around you. And see what you can do to help the world be a little bit better place. We'll see you next week.